Often a client will come to us and say, I don't know what's wrong, but all I know is I'm paying way too much. I've talked about planning, I've talked about reporting, but I'm paying too much. What do I do? They're not too sure, or clients are not too sure, or some of their advisors aren't too sure what might be done, but they've heard about some strategies. All of us have the same concern. We don't want to get the envelope in the mail with the black lettering at the top left, because you open it up and think, oh my gosh, what do I got to deal with? But that's counterbalanced by, I know I'm paying too much. The person that ends up reporting their taxes after the end of the year pays more than the person, business owner or real estate owner, that goes in and does tax planning earlier on in the year or years before.
And how many people do that proactive tax planning? I don't think a lot.
Very few. Very few. Now, it's important to note that we're not talking about things that are beyond the IRS's desire or beyond what a common accounting practice would be. We as business owners and real estate owners and families that are successful often pay more in taxes because we're reporting. We haven't looked at the options. Or we've installed some asset protection vehicle or estate planning vehicle that causes a higher tax that we didn't realize. Well, at the firm, we spend time in review, design, and implementation over client-specific needs to talk about how tax planning, asset protection, family planning, and estate planning all blend together.
So in the income tax area, like all the others, it's back to holistic planning. Understanding everything they have, reviewing it, designing a plan that they approve, and then figuring out how to implement that plan.
And that plan needs to be reviewed every year. Taxes are ongoing, and your planning should be ongoing.
And the government
changes it every year. So every year it needs something that needs to be done at the beginning of the year. It's not something April 15th. And it's not at the end of the year we need to go out and buy even more equipment because we got this cash on hand, we don't know what to do with it. It is an ongoing, and that's something that we have a process for that allows the client, once they step into that process, to take them from year to year with the tax plan that's necessary and integrated into their business and estate plan.
To go along with that, I think that one of the biggest comments that our business owners make is how they get frustrated that their tax advisors seem to be just scorekeepers. Someone who gives them what the score is at the end of the year of this is how much you made and this is the only deduction you can take, instead of getting together at the beginning of the year and developing a plan on how we really want to run the business, how we want to run our own personal finances to be able to take the fullest advantage of the tax laws in our favor.